Welcome, everyone. Thank you for joining us. We've got episode 3 today of our introduction to crypto. Today we'll be talking about chart patterns. A lot of you probably know about chart patterns. They're basically the go-to trading style if you're new to charting and trading, right? You see a bull flag, you know what a bull flag is, and you want to buy a bull flag. Well, how do we know if that's really a bull flag, if it's just a fake out? How do we know if it's even a bull flag, right? How do we kind of tell the difference between what's real and what's not real on the chart? Because it's easy for the chart to show a potential pattern, but for the pattern to actually be ineffective and trap a lot of people that think it's going to, you have a bull flag breakout, you buy, you think it's going to keep going up, and it actually gives you a little push up and then tanks right back down. So that's what I'm going to help you guys figure out today. Also, if you want to practice your trading and do some paper trading, I always recommend that with either just a pen and paper or a spreadsheet. But also, if you check out BingBon, links in the description, you can actually trade with virtual currency. It's called VST. They have a separate VST account that already is preloaded with like 100,000 fake currency. So if you ever want a paper trade, you can do that. And if you use 1x leverage, you're basically spot trading, so basically non-leverage. And then you can use low leverage to practice as well, and it's going to show up just like a normal trade would. I'll also feel free to ask questions in the YouTube chat. I have that pulled up on my other screen so I can see you guys. And also, sorry, wrong thing. And then also I have my buddy here again. He's joining us. He's trying to learn as much as he can about charting, trading. So he'll be chiming in and asking questions when he has them as well. So feel free to ask questions, but let's get rolling. Is this going to be available to watch after the live stream ends? It's 2 a.m. here. No, Jose, sorry, you got to stay up. We're going to go probably 4 hours. So I'm going to need you to stay up till 6 a.m. Okay. Thanks, Jose. No, it'll be available to watch on replay, and it'll probably go maybe about an hour. All right. So here we have a lovely Bitcoin chart, and let us find a pattern somewhere. Let's zoom in. So one thing I want you guys to do is post some chart patterns here in the chat that you know of, and we can look through those. All right. I'm going to look through this real quick to see if I can find a quick chart pattern for us to go over. Right here, we have one. All right. And another thing to understand about chart patterns is they have measured moves. So they're easy to know the target of, because if you have a bull flag, you're going to have a set target if it breaks out. So let's see here. We have what looks like a bull flag here, or a bull pennant, one of the two. So bull flag is going to be a channel. And let's actually, real quick before we go crazy here, let me explain to you guys what a bull pennant is and a bull flag is, okay? So basically what you're going to have is a big move up. That's going to be your flag pull, okay? And then you're going to have a bull flag or a bull pennant. They're basically the same thing in my opinion, okay? Bull pennant is a pennant. Bull flag is going to be a flag like this, all right? And what's going to happen is price is going to go up, and it's going to be going down like this, and it's going to break out, hopefully retest, and continue up. Okay, pretty simple. Same thing with a pennant. Okay, you're going to have a triangle here. Basically, price is going to go up. You're going to consolidate in here, break out, hopefully retest, and continue up. Pretty simple, right? All right, so how do we know our target? Let's just say that this right here is $1. Okay. And that's where price started at. And up here is $3. All right. And you've got this bull flag here, this bull pennant, and price breaks out of it. So what's my target? Okay. My target is going to be the distance from here to here. And I'm going to put it up here. So one way you can do that is you can draw from here to here. Okay. Take this, put it where the breakout happened, and draw up here. And that's going to be $5. Now, that's an easy one to do with math. Sometimes it's harder to do with math, so I just draw this up here. If it's 1 to 3, you know that this is $2, so the breakout's going to be about $2. So it might be just short of $5 since this is $3 up here. Maybe this is like $2.80, so maybe the target's like $4.80. But basically, that's how you guys do chart patterns. You have a Pattern, you have a breakout of the pattern, and then you have a measured move or a target for that move. Pretty simple, right? Obviously, it's not as easy as things seem, but you will get some very clean setups, and they'll have clean targets, and they should reach their target or get close to it. All right. I'm just reading the questions here real quick. You guys, honestly, I appreciate all your questions, but I'm going to stick to the topic here. So any other charting questions or charts on anything else, we're not going to talk about. We have a bull flag on SXP USD 1 hour chart. Yeah, we can look at that. Let's see. All right, so SXP Tetherist, bull flag on 1 hour chart. We have more. Let me see. I would almost consider this an ascending channel. Maybe on the 30-minute chart, it's a bull flag. So if I take my parallel channel here. But it's a little, there we go. There's a bull flag. I would agree with this. Okay. So we have a nice measured move here. So we have our flagpole up to the top here. Right? Pretty simple, right? And then we're going to take this, and wherever it breaks out at, if it breaks out, it could obviously go down. We don't know yet, so we have to wait. But basically, I would put my target up here, depending on where it breaks out at. And so I would estimate a target of about 398. And I could take my forecast tool and draw that percentage, and that's an 8% move about. Okay? So if we break out here, I would be planning on about an 8% target. Makes it very easy for us to know how high price is going to go without knowing any other resistances or anything. But if I zoom out, okay, because we've been learning supports and resistances in our other videos. If you haven't caught the other 2 videos, go check them out. They're on my YouTube. But look at this. We actually have a nice resistance here, which makes perfect sense for price to break out of here and go straight to that resistance. And that would be a very good target for this bull flag. So yeah, thank you for pointing that out, Russell. So now how do we know if this breaks out or not, right? Well, first off, I want to see how the volume looked here. We do have some nice, strong volume here. Very good sign. For those of you that are in Elevate trading, you know that I really like these high volume areas. All right, so this is going to be a key area of interest for me. So I don't want to see us go below here, which we haven't yet. We've held above that, which is great. All right. But beside that, basically, I'm going to be watching for this trend line here to break above. I'm going to watch for a green candle to come out and close above here. Okay, so I want a green candle. And actually, let me go ahead and just change my candles to green and yellow to green and red for you guys. Just for visual sake for those of you that are new. Okay, hopefully this will help you guys that are new to understand the green and the red and not confuse you with the different colors. I probably should have done that last video. And excuse me, I'm just recovering from a cold. Anyway. So here's what I would look for is a candle like this to come and close outside of here. So you could see here at one point, this was a green candle up here, but it did not close above it, rejected and closed below. So I can't buy that. That is a 30-minute chart. So that this is going to close in 16 minutes. Every 30 minutes, you're going to get a new candle. So I need to wait. So at the hour and at the half hour is when these candles are going to close. So I need to wait for 15 minutes to see if I'm going to get a candle close up here. And if I don't, I'm going to wait for 15 minutes. And if I don't get a candle close up here, then I'm going to wait for the next 30 minutes to see if I get a candle close up here. Now, do I want to sit and stare at the chart all night? No. All I have to do is set an alert here. Okay, so I can just put an alert up here and walk away. Then I'm not going to be tempted to enter a trade here, whatever. And then I can go about my business, and if I get an alert, I can come sit down at the chart and see what happens. All right. But basically, I want to see a candle close above here, which is the first step. Next step, I would look at the volume and make sure it's a good volume breakout, because the biggest thing for confirmation on these pattern breakouts is high volume. All right. When you have high volume breakout, that is the market saying, okay, we had a lot of people interested in this buy. We had a lot of people ready to buy this breakout. It was a resistance point, so we had some sellers there, and we had high volume buyers come in and take out that resistance. All right. And when you have high volume of buyers buying in one spot, that means you're going to have less likely to have a lot of sellers there because buyers were really strong. You have a lot of people that just bought. Why are they going to sell, right? Now, if you have low volume buyers going up here and there's low volume, that means that there wasn't really many sellers down here and price just kind of went up there easily and there wasn't very many buyers interested in that. And what that means is sellers could actually take that advantage of that and say, okay, I'm actually going to sell up here at a higher price now, okay? So if you have low volume, so we wouldn't want to see, let's say we had this green candle here, the next 30 minutes, we wouldn't want to see a little green candle like this. We would want to see a nice big green candle like one of these for volume, okay? So we'd want to see a nice higher volume candle there to confirm that breakout. So in a perfect world, we get this breakout, all right? And then the next candle would be a pullback, which would be red, and hopefully low volume pullback. And then I could buy this pullback here with a really good risk to reward ratio, because if I was buying this, I would probably enter here. I would put my stop loss either here or a bit lower. I like tight stop losses, so I would probably put it here, and I would put my target up here. So I'd have a 1.15% risk and an 8% reward. That's a very good risk to reward. I could lose basically probably about 6 trades in a row like this and win 1 trade and still basically make my money back. All right, so then we get a breakout here. Okay, we've got this nice breakout here now. Nice volume. Nice low volume. I want to see a really small red candle here, maybe 2. Usually it's just 1 though. But anyway, so I would get a nice little pullback here. Maybe another little drop for a wick and come back up. But anyway, so I'd get a nice pullback on low volume. That means that we broke out and now people are just waiting to reload. Nobody's really selling. Price is just slowly crawling back here. And then we would hopefully buy and see price break out on this next 30-minute candle and continue upward, because you would have a lot of people trying to buy here with bids set down here. And then as price goes up and up and up and keeps pushing, you're going to have people not getting their bids filled, and they're going to keep moving their bids up, and then they're going to have to start market buying in to get filled before price goes too high. And that's when people start FOMOing into this because everyone sees this bull flag breakout. All right, and then you would just basically expect continuation and hope that we go straight up there, and you would want to see nice volume coming in. At this point, I usually, if we see a nice candle like this, I usually like to sneak up my stop loss closer to break even or at break even just to reduce my risk. But that's basically what I would look for. And again, this is just a 30-minute chart, so I would expect it to happen, in a couple hours, maybe tops. What I wouldn't probably do, since this is only a 30-minute chart, is I wouldn't hold this trade for days and days, just for the fact of it being a 30-minute chart. If it was a bull flag on the 1-day chart, I could plan on maybe holding that for a few days.
Quick question. So if you're gonna buy into this, then are you buying in all at once, or are you accumulating as it goes up?
That's a good question. So if I was going to buy early, I would buy some here, probably a smaller amount, or I would accumulate in here at these lows, and then I would add to my position here. I'm not going to really buy as this goes up, because as it goes up, I'm increasing my risk, because I would have to move my stop loss. So like if I enter here, my stop loss down here now becomes 3%, and my reward's only 6%. So I could still enter there, but basically I would want to just enter as much as I could around this area with a tight stop loss for my risk management guidelines.
Gotcha.
That was a good question though. So I more like accumulate in here at the lows if I'm going to accumulate, but I like to just wait for the breakouts completely. And basically I'm just going to take my full position allocation here with a 1% risk, because that's a great risk. If it was, so let's say my standard position size is going to be 10K. I could, with 1% risk, that's $100 and an $800 reward. I could totally do the full 10K size here with 1% risk. Now, if I was going to do like all the way down at the bottom here with a 3% risk, I would probably not want to do that full 10K size because I'd have more risk. So I would maybe want to do like 6 or 7K size. So that way I'm still risking only $100. And again, this is all non-leverage talk right here, without leverage. So, but then if I zoom out, this is kind of, it's not very clear. I mean, I would probably call this an ascending triangle, which is one of my favorite bullish patterns. So, but I don't really use wicks as much for my patterns. But for this, I would call this an ascending triangle, which an ascending triangle is a bullish pattern as well. And basically what you have here is a flat, I'll try to find a better example of it, which is kind of here. Let's look at down here quick and see if this is one. So with this one, you have a constant rejection at a resistance. You can see here at 340 how that acted as a resistance a lot. But price kept making higher lows. So what's happening is price is going up here and sellers are coming in, and then price goes up here and sellers come in, but then people buy here, we reject, people buy here, and every time people are buying faster, right? So price is dropping, but it's not going as low. So people got in here at 329. Now people got in here at the lowest at 334. Now people got in here the lowest at 335. So people are pushing, constantly driving the price up, and people are trying to get in. So that's basically saying like people want it, and people are buying it at higher prices to get it. Which is basically what we're seeing here, minus this little fake out here, is basically every time it drops, it's getting bought up sooner, right? And then we had one little panic sell here, but otherwise we're still pushing the price up. And actually, on this time frame, we could argue that this is all a bull pennant as well. So either a bull flag or a bull pennant, which are both basically the same thing with the same target. So either way, I'm looking for this support to break. But from the 1 hour chart, how I said this could be an ascending triangle, which is my favorite pattern in a bull market, because again, everyone's buying higher and higher and higher. You know, if I set my bids at 355 and they don't fill here, and then we go up here and I set them at 356 and they don't fill, and then I keep having to move them up to try to get them filled, and then eventually I'm just going to have to mark it in if I'm not getting filled. So then what you would look for here is the same thing, is a close above here. I'll just draw my little candle. You'd want a breakout, and then a retest, and then you would see us go higher. And basically what's happening is you have a resistance. You have a lot of people selling here, but keep knocking at the door. Buyers keep buying it up, and then eventually all those sellers are going to run out. So you could see all these sellers eventually ran dry, and what happens is buyers are just come in strong. And then now again, we have sellers running out. We have sellers, but buyers just keep coming back and back and back sooner and sooner. And then eventually you break through that resistance, you just run out of people trying to sell up here. And then you break through that, and usually it's a nice strong breakout. And your target for this ascending triangle is going to be from the bottom of the triangle to the top of the triangle. You're going to take this here, okay? And so my target for that would be 380 for this pattern. But you can actually sometimes play it like a flag 2 like this and play the target up here as well. So this would be like my first target, and then my second target would be the flag target. For ascending triangle, maybe cake, USD at 4H, and probably breakthrough. Am I right? Sure. I will look at cake, Russell. Let's see. Cake. Tetheris. So what time frame? 4H. All right, let's look at the 4 hour. Somewhat of a, this is more just like this is a good breakout. This is actually what SXP is doing on the daily right now. But not really an ascending triangle per se. I could maybe make a case like this. So maybe kind of an ascending triangle. So there's like symmetrical triangles too, which we can argue that this is a symmetrical triangle. And I'll show you guys those. I'm just going to Google it real quick. Triangle stock pattern. Okay. So there's a million different patterns, but basically, let me pull this up here on the other screen. I'll show it to you. And it's huge, so let's see. Oh, good God, why is it so big? That's what she said. Oh God, I'm so mature. Okay, sorry you guys. Just talking to myself over here. All right, so here's what we've got here. And I don't know why this hates me. I can't even go smaller. Basically, though, all right, hold on. Let's move this over. Okay, pretty close. And, oh, that's ascending triangle. I had symmetrical triangle pulled up, darn it. Okay, I got it, you guys. We got this figured out. Open image in new tab. Bam. Now it's really small. That's fine, though. Okay, move it over here. Okay, so symmetrical triangle. Basically, it's symmetrical. This one's not perfectly symmetrical, but I still like it. Maybe if I use the wicks, it'd be more symmetrical. I don't like using wicks to draw my patterns. I like to draw them off candles, but everyone has their own thing that they do. So here's our symmetrical triangle. And basically what happens is price goes up into it, which is important. So price went up into it, and then we drop, bounce around in it, drop, bounce around, and break out the top. And that's a continuation pattern, meaning that when you expect price to continue out of these. So you see when it's going up into a symmetrical triangle, you expect it to continue up out of it. When it goes down, you would expect it to go down out of it. So we call these continuation patterns, and there's reversal patterns, okay? Ascending triangle, usually a continuation pattern. Let's see if I can find a picture of that. Image a new tab. Okay, so these are examples of continuation patterns, all right? Symmetrical triangle, break up, which is basically a bull pennant. Break up, consolidate, break out. Ascending triangle, again, you have this one resistance line. These are usually really easy to pick out. And then you've got buyers stepping in earlier and earlier because the demand goes up and people want to buy and get in, and people want to buy at higher prices every time. Descending triangle, continuation lower. Now, again, these aren't 100% of the time continuation patterns, but it's like 70 or 80% of the time, okay? So you expect them to break out, but you can't count on it breaking out that direction. You have to be patient and actually wait for the breakout. Obviously, there's reversal patterns too, which what a reversal pattern means is basically this, where you have price going up and you have a reversal pattern, and then price goes back the other direction. All right, we'll get into those shortly, but I feel like it's important I at least mention those. Let me check the questions real quick. Anybody have any questions right now? Would you use fibs? You can use fibs for your take profits, but all charting patterns basically have set targets. So I call it a technical target or a measured target, where it's basically like, this is a chart pattern, this is what the target should be, and that's what I expect it to be. E-Gold daily chart for symmetrical triangle. I appreciate you guys giving me these because it makes it much easier. E-Gold, let's see. Yeah, so this might be one. We had a good one on Ren not long ago too. But basically, I mean, this probably looks like something I should buy eventually. But yeah, this looks like a pretty good symmetrical triangle. We'll go like this, maybe. Yeah. And we've got, so what, price went up into the triangle, bounced around a little bit, it broke out, we got our retest. This is where I could buy and expect it to go continuation, right? And we had some decently high volume breakout, okay? Not bad, decent volume. See that? That's about the highest volume in the area, so that's pretty good. It's not the best sign in the world, but it's definitely a decent start. So, I mean, honestly, this looks, what I also like to see is a breakout there and then consolidation here, which is fine with me because now I basically have a bull flag here, or sorry, a bull pennant here, right? And then I just want to see breakout of that. So it's actually a symmetrical triangle breakout with a bull pennant here. And then now I want to see the bull pennant breakout. Yeah, I mean, that looks great. Nice. And so what would our measured move be here, you guys? Let's see. And now we could either say from here to here or from this whole thing. I like to say the conservative side and say from here to here. Okay. And so we're going to put the breakout here. So my target would be 268. So from 268 to almost 100%. That's great because my stop loss would probably be somewhere down here. So my stop loss would be probably like 10%. All right, which is a great risk to reward. And if we're saying this whole thing is the flagpole, then technically my target would be even a little bit higher at like 300. Okay. Now for symmetrical triangles, you can also use this as a target from the top to the bottom here. Okay. And then take it up here. And from breakout, my target would be about 230. So I would be looking 230 to 264-ish. And the person that asked about Fibonacci levels, I'm going to just draw from here to here. I'm going to totally ignore this scam wick. And what you can see here is that the flagpole target happens to be my 1.337 Fibonacci level. So this is a great target, great setup here. Lots of confluence all around. Some decent volume breakout. I would love more. Obviously, more is always better. But as far as everything looks, it's good. So we would want to either go to lower time frames to see if we're going to break out here, or we could just buy this retest here with a tight stop loss and see if it works out, basically. That is what she said. Yes, 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 Matthew. Can we do Litecoin? We could do Litecoin, but I don't know if there's any pattern. Again, you guys, we're not doing really chart requests tonight other than if there's some patterns we can look at, I'm always more than willing. And we should definitely do inverse head and shoulders because everyone likes inverse head and shoulders and half the time they don't work out. Okay. And I actually have a really good example on Twitter that I'm going to find real quick. And if it takes me longer than 30 seconds, then I'll scrap it. Let's see. I found it. Okay. Let's see if I can get this pulled up here. Okay. So, here's an inverse head and shoulders. All right. And actually, I'm sure all of you know what an inverse head and shoulders is, but let's just look it up. And again, this is a reversal pattern. So, price is actually going to go down and then back up from this inverse head and shoulders. So let me find another good picture here. Why do all these pictures on Google of head and shoulders suck? Let's find a good one. Okay, here's a good one. Okay, so my friends, here is, let's zoom in. Okay, inverse head and shoulders. All right, so you've got a left shoulder here, all right, and then you've got a head which is deeper than the left shoulder. Then you've got a right shoulder, okay? So it basically looks like a head with two shoulders. Easy enough. And you've got the neckline is what we call it here, okay? That's what a head and shoulders is. Shoulder, head, shoulder. And now, here's something very, very important I think you guys should listen to. Take this bit of advice because it helped me a lot. First, understand the volume. Inverse head and shoulders and head and shoulders, there's a volume metric to it you need to understand. So we're not going to review that too in depth right here. Please go look it up online. It's pretty straightforward what the volume needs to be. But you're going to look at the volume on the shoulder, the head, and the shoulder, and that can give you a clue early on whether this is going to be a successful pattern or not. Now, it's not obviously 100%, but it'll give you early signs. So you can give it more. If it's following the right volume profile early on, you could say, okay, this looks really good. I'm going to wait for this neckline because I think this is going to be a good breakout. Okay. But the one bit of advice I want you guys to take from this is that the right shoulder, if it's in between the left shoulder and the head, it has a better likelihood of working out. I don't know why, but I read this somewhere or learned it somewhere one time. And I've noticed it that a lot of times when the right shoulder is in between the left shoulder and the head, it works out much more times than if the right shoulder is shorter than the left shoulder. Okay? I don't know why. Let me get rid of that real quick. So basically what's going to happen here for your head and shoulders, you guys, you're going to have price dropping. Let me use this tool here. So you have price dropping, and then you're going to have a bounce here, a drop, hit on that same neckline, another drop, and then you're going to hit that neckline again, hopefully break it, retest it, and then go up. Okay? So this is what your head and shoulders is going to look like. All right? So you got your left shoulder, your head, and your right shoulder. And now what I mean by the right shoulder being in between is I want the right shoulder to be somewhere in between here. I don't know how low it's going to go. It could go down to here. It could go just barely here. Basically, whenever the right shoulder is in between here, it seems to have a better hit rate, okay? Better success rate. Now, if the right shoulder is here, it could still be successful, but for whatever reason, like I said, more times than not, I've had it work way better when it's down here, okay? That's just what I look for, and if I see it there, then I like it already a lot better, okay? Now, how do I measure this? I'm going to take my drawing tool from the head to the neckline, and I'm going to go from the breakout, and this is going to be my target. Okay, pretty straightforward. So if this happened, head was at 80, neckline's at 124, then we break out here, my target's going to be 164, okay? Now, volume is important with breakouts, as I said, and you can see here this was back in 2017 or so, 2018, we had this inverse head and shoulders here, and everybody on Twitter was super, super bullish. Everyone said, this was down at 6,000 and this was up at 10,000. So everyone was saying we're going to go to 14K from here. And I was skeptical because there's no volume on this breakout. Look, we actually have declining volume. So price gets up here. We have a very weak volume breakout. We have a hanging man here, and then we literally just start to sell off. No buy volume. Nobody was interested in that. And since no buyers were interested here, sellers were more interested up top and sold us off. Okay? So that's how that works. Volume is super important. Now, if we would have had a high volume, one of these big high volume green candles on this breakout here, would have had a lot better chance of success there on this retest. All right? And now this is how a lot of buyers get trapped. They get trapped buying this breakout because they see the pattern and they don't know how to understand the breakout. And they get trapped in there, and then we see a big drop. So that's one easy way to protect yourself. This low volume instantly makes me, very cautious. Let me check all your comments. Yo, did I miss the wrap? No, you did not miss the wrap. I have not wrapped yet. I did rap in one of my videos the other day, you guys, though. You need to go check it out. And I had a really, really good dad joke on my breakfast video this morning, so I'm just saying. I really like this eagle chart, though. I really think I just need to go buy this right now for the moon mission. When you measure the start of... Hold on, I'm trying to read your questions here real quick. Bow and arrow pattern yesterday on Twitter. It was the first time I've ever seen that. Mind going into that. I posted a bow and arrow pattern yesterday, you guys. I was just bullshitting. It's not real, but it was on True. So it was actually just an inverse head and shoulders. So I posted a pattern on True yesterday, and basically what you have here is an inverse head and shoulders. So you've got the left shoulder here, the head, and then the right shoulder. And remember, the right shoulder is lower than the left, so I really like this. And what also do we have here is some nice volume. And I did not buy any because I'm actually not on regular Binance anymore, so I'm really sad. But again, we are already up 10% from that breakout. And if we measure this, we're going to say that our target is about 63 cents. So from our breakout to our target, it's about 50% profit that we could expect from this target here that I'm going to be missing out on because I'm not on Binance. Sad day.
When you hit your target, are you taking everything out, or are you leaving some in to see if it runs any further?
It depends on the move. Like if it hits your target and rejects hard, it depends on the move. Like I usually just take it at my target because usually there's some sort of pullback anyway. But if I'm still bullish, I could always look to buy back later. Like for this chart, I would say that if we hit 63-ish, we could come back down and retest this 50-cent area before going up, just because this is a major breakout area if we do break out here. So that's kind of what I would be expecting. But again, you could, if your target's 63 and price just goes straight up to like 80, then obviously I usually hold that. But some people like to set limits, so they'll already just set the sell orders up there because sometimes you'll get a quick wick up there and go back down. I'm the type of person that I just like my targets. Like I know where it's going to go from my pattern breakout. It's very likely at this point that it's going to go to around 60 cents. So for me personally, I just like taking profit because I have a guaranteed 50% there if it reaches my measured target, which it's looking very likely at this point. So I like to take my profit. A lot of people get greedy up there and they're like, oh, it's at 64 cents now. It's going to go up to $1 in no time. And then that's when it pulls back. And now you're up, you were up 50%. It goes back to 50 cents and now you're up 10% again. And you're like, oh crap, I should sell so I can lock in some profit. And then there it goes all the way back up and even higher. So I like to lock in profit when at my targets because that was the setup on the chart and I don't have like anything else to go off of there, if that makes sense. It's like once you play the setup and it hits its target, it's over. So like Algo the other day, which it looks decent here. But anyway, I think it was actually Algo Bitcoin. I'll show you guys a trade I took. It was on. So basically here it is. It's on the Bitcoin pairing. And basically I have this inverse head and shoulders again, right? So left shoulder, head, right shoulder. And I had a breakout here on nice volume. So I went ahead and I bought here. And I don't know if it reached my target yet actually, but yeah, it did. Okay. So there was my target. And I sold. And it dropped all the way back down to almost where I entered. Because I entered like right here. So it went basically right back to my entry. So I locked in profit. If I still like it, I could re-enter, I guess. But I blindly sold because it hit my target. And that ended up being the top for the last 24 hours. And now we're down like 10 or 15% from there. So I like my profit, you guys. But yeah, we hit the target there on my inverse head and shoulders. And they could be slanted too. It doesn't matter. The neckline can definitely be slanted. You can see a nice breakout here. But True looks good. Eagle looks good. I'm going to have to check out those charts a little bit more in depth. Yeah, but I couldn't buy True, obviously, because I only have Binance US now. Hey, Sven from Austria. Welcome. Yes, I will upload the stream. All of these streams are available on YouTube. They're right on my front page. I've got the first two on there as well. Kyle asks, what are you looking for profile-wise with the volume? For head and shoulders, I think you want most volume in the head, but again, I don't remember the volume profile necessarily. I usually have to go look it up. I more so look for the right shoulder to be in between the head and the left shoulder here, like this. And this right shoulder is in between. And then I use my breakout volume as my key factor. But there is a real volume profile on the right shoulder. And you want to see volume increasing on its way up, which we saw here, which is good. Is the neck must be horizontal or can it be steep? No, the neckline can be like this. Okay. And you can have your inverse head and shoulders like this. Breakout, boom, boom. That's totally fine too. It can be however it needs to be. I don't really like it slanting this. I would say I don't like it slanting this way, up. I guess it's still valid, but it looks. I've never traded an inverse head and shoulders like that. So either flat or trending down a little bit, and it's just going to be the opposite for head and shoulders. Okay, so we're basically doing bullish reversal patterns today and continuation patterns, but they're the exact same for bearish. They're just opposite. One more we should talk about too is a falling wedge, real quick, and I actually think I see one here on this. Let me see. Okay, so falling wedge. And let me just Google it real quick. Excuse me, guys, sorry. Okay. So falling wedge pattern. Let me open this. Basically what happens here is you have price falling down and then getting tighter at the bottom of this wedge and then breaking out and continue up. Okay. So you can see that's pretty much what happens here. And if I draw this here, we've got a nice retest. Nice breakout on high volume as well. So you guys notice the highest volume in this area is actually right here on this breakout. So that's great. This is a good retest, obviously, where I would probably look to buy. I would usually put my stop loss below this candle anyway. And you could see here, we retested the trend line and now we continued up on increasing volume. That's a really good sign. So that's great. That's a really nice clean falling wedge, nice breakout. And if we even bought the retest here, we would have been up 15 to 20% at one point, which is great. Okay, so that's falling wedge. You can have it. Again, maybe we had another one here, which obviously didn't work out very. That's not very clean. I was going to see if we had another one somewhere, but we don't. Maybe right here we have one. Bam. Okay, so something like that. So when you see these and they get tighter and tighter when they break out, they're usually reversals. And when you see them at the top, they're called rising wedges, and they usually go down. And it's usually going to be on decreasing volume. So you're going to likely see, as this drops, you're going to likely see especially sell volume drop. And what you see here is basically sell volume drop, except for this big wick here, which probably ended up being buyer volume. But you see here, as this goes down, price is going to, or volume is going to drop. And then you have your big volume coming up out of there. Really good signs. You should coin that bow and arrow pattern. It sounds better than inverse head and shoulders. Yeah, that bow and arrow pattern was fun. Yeah, I just like making up some fun charts at night sometimes for the hell of it. H bar, you guys, I posted this the other day. Bling bling. And this was the bling bling money chain pattern on Twitter. But basically, I think you guys can all spot this, right? Falling wedge, bull flag, whatever the hell you want to call it. With a huge target potentially. All right. So get this breakout. We got a retest here of support. We didn't quite go down to the breakout area for the retest, but technically I had this drawn up a little bit higher when I posted my chart because I think it's more of a channel. But either way, so you got this retest here, and you've got a nice strong breakout, and you would expect basically a 80% move from here. All right, nice high volume here, but low volume on the breakout. That's my only little concern here, is that really low volume on the breakout. And we had low sell volume too, which is good, but we have some high rejection volume here. I could be a little concerned about this and say that could be a fake out. Okay, I don't know for sure, but if this volume candle was here on the breakout, I feel a lot better about it than here. So if I was in from here, I would probably take in a little bit of profit here and tighten my stop loss up to just really be cautious. Because when you have all the volume up here at resistance, that means that maybe this is kind of fake out and a lot of sellers came in and we might drop. And the chili pepper pattern. Yeah. Oh, yeah, this was the chili pepper pattern. That worked out great. What other questions do you guys have? Does anybody have anything? I feel like I did a pretty comprehensive look at these. Obviously, there's a million different patterns. The important part is the actual formation, making sure it's valid. All right, don't make up shit. It's very easy to make up shit on your own. Cup and handle pattern is one you should learn for bullish conditions. Basically what that is, and I think this is one here. Basically, you have price go up, and then you have a cup, and you have a handle, and then you break through this resistance. Okay? So you got this resistance here, price goes up, you got a nice round cup here, a handle, breaks up, retests, and continues up. Excuse me, sorry you guys, I'm just recovering from a cold here. But your measure, I actually don't even know the measured move on this. I think it's from the bottom of the cup to here. And I think I do see one here. So something like this, cup, handle, and then so I would say like maybe the target's from here to here for my initial target. Something like that. Check the questions. No, I love all your questions, guys. I appreciate all the comments. We've got about 10 more minutes, so feel free to ask more questions. If you have some patterns you're not sure of, let me know. If you have a pattern on a chart somewhere you want me to look at. But otherwise, this one is just the only one I'm a little skeptical of because it was really low breakout volume, which is just kind of odd. Now, it could definitely continue up. But again, where's our resistance at? Whoops. Here's our big resistance right now. And we've got two big wicks in there and a really high volume one here. So I would definitely use caution if I was in H bar. And I wouldn't be buying up here at this point. But yeah, I mean, that's the important thing on patterns is making sure the pattern's valid, structure-wise, understanding whether it's a reversal pattern or a continuation pattern is important. You can use your indicators to help you. So like, I'm trying to think of one. I think Phil might have been one. Let's see. So if you have an indicator like your RSI or your OBV that break out before price does, so like here on Tilray. Okay, so I've got a nice bull flag here. Bull pennant, bull flag, whatever you want to call it. Okay, we're going to call it a bull flag here. On Tilray, it actually broke out right here before this price did. So it just started breaking out right before. So that was a good indication that we would probably break out of here on Tilray as well on this flag. So if you have an indicator that leads price action, that's usually a good sign, especially if it's OBV. So like if you have price still consolidating and OBV already breaks out of its flag, that's really good confirmation. And again, here on Tilray 2, we have a nice ascending triangle. Okay. Bam, bam. We got this nice resistance here. Keeps hitting. Price is making higher lows. And we break up nice, strong out of there. And then we've got a bull flag, bull pennant, whatever you want to call it, continuation pattern, and we continue higher. Yeah, I like this. That looks pretty. And bam, bam. Do you listen to CT? Do you listen to crypto Twitter for any advice? Seems like stop trolling. Not really. I usually, the worst thing you could do is check Twitter before you look at the charts, because if you check Twitter and you see a bunch of different random things, they could make your mind up before you look at the chart. So you should always look at the chart yourself first. I mean, there's people that I respect their opinions on Twitter for sure. Make sure you're following the right people. But mostly I use it for confirmation. Like if I'm already in a chart, or if somebody posts a chart and they think something's going to happen, I'll go look at it and I'll see if it meets my criteria or not. Litecoin, Bitcoin, descending wedge. Let's see. I don't think so. Where did Litecoin, Bitcoin go? Here we go. Litecoin, Bitcoin is just ugly. I mean, that's not really a falling wedge. Not on the daily. It's just death. I mean, at some point it's going to bounce. It could be here. But again, I'm not going to do a TA session right now. I mean, even this sold off. Like, that's not a good sign. And we retested it. So I don't know what the hell is happening with Litecoin, but it's just... Even TopGoonX doesn't like it right now. XVS daily. I've never heard of this. This one looks much better than H bar, you guys. So this is actually kind of what I was talking about with H bar. So this kind of looks like H bar, right? This nice descending flag pattern here and actually had some high volume, which is great. We retested and fine. But you got this push up here and kind of rejection a little bit. That's potentially what H bar could do. But if we're going this whole way here, let's just say we're calling this whole thing a flag or pennant or falling wedge or whatever. We have some nice high volume breakout here. So yeah, I do like this. I like this high volume coming in here. And so I would want to see us continue here because we're kind of rejecting a little bit. But for me and you guys who watched the first video, if you didn't watch the first video, you don't know this. You've got this rejection here. But once you get a close above, that candle is actually invalidated as a rejection, and usually you end up going much higher from there. And we've got a nice high volume breakout from there now, and this thing could actually just freaking rocket soon. I mean, I would want this to go straight up from here if I entered, but this definitely could just straight rocket from here. It looks really good. We do have a nice ascending triangle here too. Way down lower, of course, but this is a good, pretty chart pattern for us to look at as well. So when you see these, I really, 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 really like these. That's really pretty. And then you've got a nice, it always looks so much cleaner in hindsight, you guys. And you can actually have bull pennants like this too, with a flat bottom. These work just as well, okay? This can be a descending triangle. It can be a descending triangle and actually go down, but usually if it goes up, and it break back up. If it drops down into it, it'll break back down. Do you have any video on volumes and circulations? I'm not going to tell you volume is bullish otherwise. I don't really have a video on it other than, I mean, you can check my YouTube videos for things like that, but basically just look at the local volume. That's all that matters. So this volume over here doesn't really matter for this breakout. You just want to make sure that this volume here is higher than the rest of this volume for the most part, and you can see both of these breakouts had higher volume. So this looks good. I like this chart a lot. I mean, you guys have shown me some really good patterns that are totally chart patterns that I would buy. Now, I wish I was on Binance to buy some of these because True looked good. That's when I would have bought at 44 or 45 yesterday. What else do we look at? I can't remember. We looked at another one that was really good. Oh, E-Gold looked good. And XVS now, too. Am I a fan of Harmony 1? I don't really have favorites. I have a couple. Like, I really like UTrust, UTK, just because for fundamental reasons from anything else. But I don't really get too hung up on these coins, you guys. All coins go up really fast and they go down really fast. I don't get too attached to them. I just like to trade them and make extra money in the meantime while Bitcoin's just going sideways. But yeah, you guys, I mean, that's really about all we've got time for today. Any last questions about anything related to patterns? Really hope you guys enjoyed this video. Again, we'll talk about the 3 points again, basically identifying the pattern to make sure it's valid, understanding if it's a reversal pattern or a continuation pattern, and then understanding the volume of the pattern and understanding the breakout point and the volume of the breakout. Because you don't want to see this falling wedge have high volume going down. If it's got increased volume going down, that likely means you have increased selling. You can see here again at the bottom we had decreased volume, which is usually a good sign. I hope you get Binance Complete soon in US. Yeah, the Binance US is okay, but it's nothing special. But anyway, guys, all right, I'm going to take off. I really, really hope you guys enjoyed this. If you did, please retweet it. If you missed the first two videos, go check them out on my YouTube page. It's NebraskanGooner. You're obviously on it right now. If you ever need the link, it's in my Twitter bio as well. I've got Tuesday morning videos coming out to breakfast trades. It's just quick 5 to 10 minute videos, just with some quick tips and tricks on trading every Tuesday morning. Russell, thank you for joining. I appreciated your comments and replies. And everyone, I hope you have a great night. I will see you soon.